Hey, welcome everybody to the 40 Finance channel. Today we're going to be talking about maybe the most popular stock in the entire world, and that is, of course, Apple stock. And I think the conversation around Apple stock has been very interesting over the past couple months, leading into the holidays, and then, of course, here we are after the holidays in January. And, on the one side, you have the economic conditions that are influencing the stock market, whether it's interest rates, fear, all those things that are keeping stocks down. But then on the flip side, you have another conversation going on with Apple, and that is, concerns around their growth prospects, at least in the short term. So in this quick stock analysis here of Apple, we're going to look at both sides of the coin. I've got a couple articles like the one you see here of people that are very bullish on Apple and consider it to be sort of a steal right now. And then we'll dig into the metrics like I always do and see how Apple stacks up compared to some of the metrics that we've seen over the past 2 years when they had such a big boom during lockdown and the COVID times. Now, before we jump in here to Seeking Alpha for our stock research, I want to call out if you're interested in learning more about this awesome stock research platform, my affiliate link is in the description. Potentially support the channel. There's a special deal down there, $99 for the entire year of Seeking Alpha Premium. That's 12 full months, not a per month charge, $99. So check that out if you like some of the things that we look at today. Okay, we'll kick off with the bulls here. Obviously, on this article, Apple should be a $250 stock. So says Loop Ventures' Gene Munster. And I think Gene Munster is one of those guys who's on CNBC all the time. In fact, that's where I think this quote came from. All right, so Gene Munster, his argument is the Loop Ventures founder and managing partner argued that Apple is one of the world's greatest companies, although the iPhone maker's guidance for the December and March quarters looks disappointing. Munster attributed near-term softness of the firm's expected results to production issues in November, as well as the impact of unfavorable currency exchange. I think most of us knew that. However, the analyst said that Apple is currently undervalued with a P/E ratio of 21. He compared this to big-name non-tech companies such as Coca-Cola, Disney, Caterpillar, which have P/E ratios around 30. So definitely an interesting day when you see an Apple P/E ratio in the 20s and Disney and Caterpillar, Coca-Cola for crying out loud, in the 30s. I didn't fact check that. But that is an interesting development for sure. Now, as far as the $250, where's that? Oh, it's right here in the first paragraph. He is still optimistic about Apple in the long run and expects the stock could reach $250 by next year. Such a move would represent a near doubling from Wednesday's midday price of around $127. So Gene Munster, certainly an Apple bull. Let's take a look at another bullish article, and this is the same stock image they use for both, but this is from Wedbush Securities, another CNBC celebrity, if you will, Dan Ives, who lowered his price target on Apple to $175 on Wednesday, noted that the demand side of the tech giant is still holding up amid economic weakness, and the stock's risk-reward is a table pounder at current levels. Moving on, Ives noted that the easiest thing for Wall Street to do is to be negative on tech, given the worsening economic conditions around the globe, earnings compression, technical breakdowns, and worries over what guidance for 23 will look like. However, our approach, says Dan, into 2023 is much more opportunistic one for the tech sector, as this is a near-term macro climate uncertainty will lead to the next cycle of growth over the coming years, and that begins now in our opinion. So the one thing I would definitely agree with on Dan Ives here is not necessarily the table-pounding valuation of Apple, but I'm in the same camp as him from a broader view of tech, right? And obviously I talk about QQQ all the time, And I think from a long-term investment standpoint, long-term being, call it 2 to 5 years, I think taking some chances in tech right now is not a bad call at all, especially when you look at the historical valuations for some of the market leaders right now. They talked about Caterpillar, and I know oil stocks are doing what they're doing. So tech's been cast aside, and understandably, in this interest rate environment, but there's people like me who argue that this is the opportunity. We'll have to see how it plays out in 2023. All right, taking a quick look at the 5-year stock chart for Apple, plus almost 200% for those that got in 5 years ago. But no surprise, like so many tech charts, you can see right before COVID how it exploded. And even though it's had weakness here recently, it's still substantially above its pre-COVID price. So if you're at the 125 mark or so today, and I just hover back to February of 2020, Apple was $80. So there's been, this cliff down, which was last year, basically minus 30%. There's a lot of talk about that, but honestly, it's not much different than what we're seeing from other tech stocks. Now, typically when Apple does hit a downward cycle, it's usually because they've run ahead on their valuation. And you see on this screen, the P forward right now is 20.43 on a $6.19 EPS. So let's talk about that valuation here first using SeekingAlpha. And the first thing, and I've said this on numerous stocks, the first thing to know on SeekingAlpha, this valuation grade of an F, that is related to the sector. And the problem with the sector here, Apple's in technology, hardware, storage, and peripherals. It's all IT at the end of the day, but what makes Apple weird is just it's like consumer technology, right? It's consumer products. So you have to be careful with this headline grade of F. What I typically do with stocks is compare it to the 5-year average. And so let's go through the numbers, and we're going to focus on going forward, okay? Forward numbers. You can see, first of all, Apple is GAAP EPS, so we can use that for our PE. Trailing GAAP of 24.37, that's 15% lower than the 5-year average, okay? So slightly undervalued. The forward PE is minus 11%. So the forward PE is also lower than we've seen on the 5-year average for Apple. Let's take a look at some other numbers. How about PEG ratio, price to earnings growth? 1.9, this is a forward-looking metric, about 3% off the 5-year average. If you want to get into price to sales looking forward, they're coming in under 5. 5-year average is 5.2, so that's minus 4.5%. And then price to cash flow, which no one has as much cash flow as Apple, 17.8 right now. That's about 4.5% off of the 5-year average. So I definitely agree that at least on these metrics, the valuation is cheaper than what we've seen Apple in the past. Now, what is that good for at a forward PE of 20? And in my mind, looking at these metrics, which some of them are minus 10-ish%, some of them are minus single digits, you might be able to bleed out a PE multiple instead of 20. You might be able to eke into the 23s or the 24s when some of this interest rate fears go away, right? When you pull some of those people off the bench. All right, at the beginning of the video, we talked about, the bear side of Apple, which to me right now is 100% growth and 100% research and development. I think anybody who's going to take a stab at Apple or throw rocks, they're going to get into growth and they're going to get into R&D. R&D, of course, meaning what's coming up. How much more can these phones really do in the modern day? Between the metaverse and VR and AI, those are the big things going forward. Absolutely, for sure, here in the short term. That's where these tech companies are placing their bets. We know that Apple has a VR headset potentially coming out, but I don't know if that's quite big enough from a research and development standpoint to really move the needle for this company. Now, those headsets could get massively popular, right, in 3 to 5 years. I don't see it in the short term myself, but then again, at my age, I really have very little interest in walking around with a headset on. So don't ask me what the next hot trend is going to be. But, thinking about immediate growth, right? Outside of new Apple models, which they're going to have a new 15, 16, 17 iPhone every single year, just like Samsung and everyone else does. But what is the game changer? What is the have-to-have development in those phones? And, Samsung threw out a foldable one. I don't know how those sales did. I've seen a few people with them, but at least looking ahead to 2023, I don't see a lot of game-changing stuff coming out from consumer technology. And with that in mind, you start to figure out what the problem is with the multiple. So here we see revenue growth looking forward, 5.4% for Apple. Now, 5.4% on billions and billions of dollars is pretty daggone impressive. Okay, like a lot of people underestimate, you see 5.4%, but their starting line is gigantic. And it's not like you can just have a 20% off sale and move this stock 10%. It's just not going to happen. So they're doing a good job, in my opinion, if they hit 5.41% in these current economic conditions. Unfortunately, it's a race against yourself, and their 5-year revenue growth is running about 8%, so you're 37% off that growth average per year. Then if we go down to EPS, so EPS diluted growth forward, 6.51%. Apple's usually in the 15 or 16 range over the past 5 years. That's 58% down. Okay, so that's where you start to see the lower multiples. So when you think about a PE of 20, a forward PE of 20, maybe it comes down from there if the market continues to slide. This is why. It's not because it's a bad company, all right? Everybody's multiple is coming down because these growth numbers are not going to go up in 2023. Everybody's growth numbers are going to be down. The question is, of course, if you land flat in 23, all right, then let's just blame it all on the economy, just for the sake of argument. What are you going to do in 24 to get back to 9% revenue growth going forward? And then from an EPS standpoint, 15.7% growth. And they'll need to get back to those numbers, and it probably will not be an easy task. Now, let's take a quick look at free cash flow per share growth. You got 6.8% or so for this year. That's also down minus 28%. All right, then you got operating cash flow going forward, 7%, down a little bit from the 5-year average of 9%. But this is where you're getting into a crossroads if you're Tim Cook and the Apple executives. Which way do we go? All right, and it probably is going to go towards more profitability, because you can't invent once-in-a-lifetime products just because you feel like it in January, right? So I wouldn't be surprised if they lean more towards profitability and controlling the things they can control in 2023. So that could be price hikes, could be labor cuts, that could be manufacturing pullbacks on the amount of inventory that they hold. There's a lot of ways to do it, and that seems the more likely path for Apple to outgrow their current stock prices, maybe raise that EPS a little bit by making some cuts or making some strategic adjustments to boost that earnings per share. And speaking of boosting earnings per share, whenever you're talking about Apple, you have to wonder about the stock buybacks, right? Is the interest rate environment going to continue to allow them to buy back in the state that they currently have? And if you go at least by last year, as interest rates were increasing, let me see if I can bring this up a little bit. And if you look at this bar graph, you can see that last fiscal year, they even topped 2021. What will be interesting though, with the price of Apple to where it is, if they allocate the same amount of budget to buy back shares, they could obviously increase the number of shares that they would be able to buy back, especially when your budget is as big as $95 billion. All right, now I'm going to make a quick price projection for Apple, a simple back of the napkin dart throw on this one, just to give some perspective to where we are at this 125 number as it pertains to the EPS and valuation multiples that we just looked at. And if you're looking at September of 2023, right, that's when their fiscal period ends. And that fiscal period ends at a different time than our calendar, right? So as investors, our calendar runs from January to December, but Apple's fiscal calendar ends in September. So you have this stretch in October, November, December that is 2024 in Apple world while we still live in 2023. And that can make a big difference, particularly when we're in the midst of these oddball economic conditions, right? So September 2023, the fiscal year EPS is at 619 as far as a consensus. You got 41 analysts, a low of 540, a high of 687. If they hit 619, you'll have year-over-year growth of only 1.2%. and a forward PE currently at 20.43. Now, for the sake of argument, I'm just going to assume that they hit that number, all right? Because I'm not super worried about the September 2023 number right now. I'm thinking of how Apple ends the year. So in order to end the calendar year, I'm actually going to do 2024 projections, which is seemingly far away, but if you think about it, when we get into August, September, you're going to be looking ahead to their 2024 year and whatever guidance they provide for that. So currently, that EPS estimate is $6.76, $6.76. 34 analysts have thrown their name in, ranges from $6 to $7.33. On this number, I'm going to take the under, so to speak. I'm going to take $6.50 for now, only because it's hard to tell how much worse things get with interest rates and whatever. So I want to be conservative to the downside, and I'm going to say $6.50. And keep in mind, that's just preliminary guidance for that year. They could easily get into $7 or something by the end of 2024. But when we get to August, September, October, what are they going to originally guide for? I think $6.50 today is a fair number. Now, we take that $6.50 and we think about those valuation multiples, P multiple, forward PE, etc. And where they sit today, they're right around 20. $6.50 times 20. Let's see where that would put you. $6.50 times 20 is $130 right off the bat. So $130 right off the bat for Apple heading into October. I think that's, arguably a no-brainer, the $130. But what if the climate changes and multiples expand in tech, right? So if you get out of the 20s, for a forward PE, and let's just pretend Apple sneaks back up to 24. Let's just say 24 on a forward PE. 24 times 650 equals $156, okay? So I'm going to say on the low end for me, Apple gets to 130 by the end of 2023, and on the higher end, maybe we'll say 160. Potentially 156. So of all the concerns that are out there, and I do think that they're legitimate concerns about growth and the next shiny object. But if you're talking about 2023 and you're talking about $125 today, upside of 160, 155. It really doesn't seem that far out of reach. All right, guys, so that's my quick perspective and analysis on Apple stock as it sits here today going into 2023. Before you go, don't forget to check out that special offer for Seeking Alpha. My affiliate link is in the description. Hope everybody's doing well. We'll see you on the next video.